Okay, I want to talk about pullbacks to the comma, the adaptive moving average, or the EMA 21, or whatever moving average you're using. When we're backtesting, it's easy to see price pullback and touch the moving average, but when you're live trading, the moving average is still fluctuating. It's not fixed. Now, if you look back further on the moving average, it's fixed. It becomes fixed, but when you're placing your trade, it's not fixed. It's still fluctuating. The more price is moving, the more the moving average is also moving. So how do we decide if the price is going to touch the moving average? Let's take a look at some price action and see. Okay, this is the chart of NQ on Tradovate. It's the 1000 tick chart. So these candles aren't necessarily 1 minute, it's however long it takes to make 1000 ticks of trades. So I recorded this. This is about an hour, 50 minutes. And if I played this for you, it'd be super boring. So I'm not going to play it. I'm just going to slide this around so we can see what happens. So I'm going to just skip to the end to let you know what it's going to look like. So you could see price moved up here to about 370, 380, and then price fell down 200 points more eventually to get to about 140. But of course, when we're up here, we don't know what's going to happen. So when do we place trades? Well, when we look now back, it's easy to see. We got touches to the comma here. This is good. This one is perfect. This is very close to touching. So this one's also very good. When I look down here at the oscillators, you can see we're on a downtrend here and downtrend here. You know, the buy momentum is finished, so we're in the sell momentum. So when I see a pullback like this one right here, and we're obviously in a downtrend, this is a very safe entry. These ones right here. This one here is getting less safe because you can see there's some buy volume coming back up. There's some people cashing out, capturing those gains. But so right here is a little less safe. But you know, as we can see now, it worked out great despite the tiki squeeze, thinking that sell volume's coming off, price is still going down. Some divergence there. These red dots are showing us that we're in great shape on a great downtrend here. And when would you get? Well, I'm going to talk about when you get in, but when would you get out? Well, I would get out when price goes above the comma, so almost here, closed but came right down, closed above but came right down below. I'd be getting out right here. So closed above, next candle continued up. So what's this? This is about 180. So if you can get in, up here, and it's more than 100 points a gain. So I want to look at this right here, these pullbacks to the comma. So I'm going to roll this back, and so I'm going to press play and I'll talk as this goes. So price is above the comma here and does an engulfing candle below and stays below the comma. Tests it going back up, but can't do it and goes back down again. And now we're seeing Trader Oracle's red sell dots appearing. So this gives us more confidence that we're on a downtrend now. We're breaking down through. We've got a lower low. Our oscillators also look like price is going down. So now watch this pull up. It almost closes that volume imbalance horizontal line right there. But there's still a distance between the comma and the price action. That's about 10 points. I think, yeah, here I'm showing you 42, 55, there's about 10 points difference. So when we look back at the chart, we did the back testing, we could see it looked like it touched, but live trading showed that it didn't. So if you waited for it to come out, you would have missed that. You could have, got it as it was coming back down, or you could wait for it to come back up again. Let's see if I can just speed this up a touch. So there you go. Now looking, yeah, that was a great entry. So I got on 5 times speed right now. So it requires some intuition. As price is curving from going up to going down, it takes time to catch up to where the price is. So that's why there was 10 points or more separation. So right here, let me go back because now it's going a little bit too fast. So you can see that touched the comma exactly there, but when we were live trading, it wasn't touching. There was a good distance there. There's probably 10 points there. So how do we trade that? How do we know that it's going to touch? Well, because we're curving here, there's going to be some distance. If they're in the middle of a downtrend, we're going to see that coming up more clearly. Then the comma will be closer to where the price is, and we'll actually see it touch. But as it's curving around here, going from up to going down, then there's going to be some distance, and you just have to kind of guess. Now it could go up and touch it, but it might not, and it's still a valid entry. So we're making lower lows and lower highs. If this candle went above these candles, this wick went above these candles, I'd be worried. But because it didn't, it pulled back. We're about halfway through the total length of that candle. Then I think we're safe to enter. And what I like to do is limit orders, because sometimes the price goes up and down so quick that it's hard to catch. And if your limit order is a little higher than it goes, well, you're going to miss out, and that's trading. There's no guarantees. That's how it works. Or it could go higher than you expect, and maybe it'll even hit your 10-point stop loss. So sometimes that's what happens. But if you can get your stop loss to be above the previous wick, then it's probably pretty safe that if we're on a downtrend, it's not going to break above. There's no guarantees, like I said, but probably. If it breaks above, then there's a good chance that we're not on a downtrend, and maybe we're just chopping in consolidation. But you can see if we could have got in here, that was about 350, and we're already down to 280. We're already more than 50 points of gain. So now let me speed it up. Yeah, I'm going to go and show you this one right here. So this pullback we're about to see is very close and almost touches. It didn't exactly touch. If you waited for it to exactly touch, you would miss it. But notice as price comes down, the moving average pulls down, and now it looks like it touched exactly. So now you'd be wishing that, oh, I should have got in when it touched, but it never touched, so I missed out. But you could have got in because it was close. And this wick was above these little wicks, but there was a big drop down here as price was moving quick. And so I wouldn't measure this top of this wick versus these candles here. I'd be looking at this one here. There was a big fair value gap as it was created as it drops down here. So pulling back to the fair value gap, there's no problem with that. And in fact, this might have even pulled back further to fill the gap even more, but it didn't, and price continues on. So I think you get the idea. Because we're on a downtrend here, and the angle of the moving average, the comma, is so steep, it's easier for price to come up and hit than it was here when price was curving around, and the moving average was more up here and the price was down here. And just some consolidation, but notice it's not staying. It can't stay above the moving average of the comma, and then it drops down. And I like this. I like this distance between the comma, the EME21, that's the blue one there, and the price. So I'm just going to skip ahead a little bit more. See, I like this pullback to the comma. This is excellent. But I'd be nervous though, because you see our tiki squeeze shows that the sell volume's coming off, and it could be against some buy volume. This one, the ultimate oscillator, shows that we're going down, so that's better. So this is not the safest entry, but as we know, because we saw the chart already, it worked out great. Okay, we're almost done. Let me just scroll this to the end so we can see all the price action. So yeah, that turned out to be an excellent entry, and notice it didn't touch the comma, but it was close, and it doesn't have to touch the comma. We just want a good pullback. We want the comma, the moving averages to be angling downwards, because in this case we're doing a downtrend, we're going short. And it doesn't have to be this one though. If you missed it, you could have got this one. This was fine too. Pull back to the volume bounce, didn't actually close it, but very close. I like the pullback didn't go above this candle, because if it did, we might be on an uptrend. So I don't mind that it didn't pull all the way back to the comma. If it would have gone above the comma, challenging this, we could be consolidating, getting into some chop here. But it didn't. We made a lower low and lower high, and then Trade Oracle's dots, sell dots, started appearing again. So these are excellent times to get in, but don't buy the tip. Don't buy the bottom here. Wait for it to pull back. Pull back here. It's a safer entry, because as you look here, often as price goes down, it pulls back 10 or more points, so you can easily get stopped out. So that's why I like to get the pullbacks. And what if you get it wrong? What if you put your limit order, because I like to use limit orders. Sometimes the price moves so quick you can't tap the mouse quick enough to get your order going, or touch the keyboard, the keys quick enough. So I use a limit order. So if price pulls back quick, I can get my entry hit and get in. What if I'm wrong? What if it doesn't quite pull back? I miss it? Well, that's life. There'll be another trade. A few minutes later, look, there's another trade right there. But what if it goes wrong the other way? What if it hits my limit, it goes past, and hits my stop order? Sometimes that happens. And that's life. There's no guarantees in trading. That's how it works. But as long as it continues down, you can get in again here. You can re-enter here, for example, on this pullback. And this 10-point stop out here won't matter. If you can get 50 points or more, maybe 100 points here, then who cares about losing 10 points? It's good to have a good win rate, but the important thing is how much money you're taking home. So, as you can see the comma coming down steep here, and the EMA 21, and our oscillators are showing us this is a good time to entry, very safe. And if you get stopped out, that's life, but get in again down here. And that's how it works. Good luck.